All right, so we're going to try putting our market structure ideas together to see if we can come up with a result on Bitcoin here for a long or short idea. So clearly from the top, which is what we're going to look at, we're not going to go too far back with our structure. We're focusing on the 4 hour, the 1 hour, the 15, and possibly the 5. We don't really need the 3, the 2, the 1. Depending on how you want to trade, if you want to find bigger trades, then you don't really necessarily need those structure pulls. So we're going to go like this. Price broke down from left to right here. We're going to go like that because this already played out. So here, here, now here, and now here. So we have a 4 hour downtrend. Very clearly a 4 hour downtrend. We can actually mark out those pivot points. So once we're done marking those pivot points out, what we can do next is we can dissect our structure. So we just drew out the swing market structure on the 4 hour time frame, clearly going down. What do we know usually happens following a break of structure? You typically get a retracement. So we have another following break of structure. So a retracement is very likely soon. And especially looking at previous price behavior, we have price going down, retracing a lot, price going down slightly, retracing a lot, price going down slightly, possibly retracing a lot. I mean, that would make sense given the overall narrative of what has been going on during this downtrend. We're not seeing any very aggressive expansions that are not mitigating previous supply ranges here. So that's a very good observation. So let's go down to the 1 hour and we'll dissect the last leg. Okay, so we have structure forming from the top down to the low here. We're going to use a different color. We will go with black. So we have a high, we have a lower low. Could have picked that lower low to begin, I suppose, but anyways, it already played out. Lower high, we have a lower low, we have a meeting point over here, so lower high, and then we have a lower low. So this is the last 1 hour lower high. And what we can go with next is we can dissect this a little bit further and we can look at the fractal nature of the move. We can go a fractal structure between here and here on perhaps the 15. But let's draw in our pivot points to begin. You have a pivot point here, 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 and finally down here. So now fractal structure will be contained within this leg in this example. Let's go to the 15. All right. You know what? Let's go back a little bit here. So on the 15-minute time frame, this is what we end up with. First of all, let's connect all these dots and lines here because that's not looking very good. There we go. All right. So we're basically looking for the downtrend that exists because how else did price get from here down to here? Well, obviously there's a downtrend, right? So let's find out the contents of that downtrend. So we'll start with our magnet tool. We'll go to the lower low. That's only one up candle, so I'm not going to actually draw that lower low, lower high. You can because it probably is a 10-minute one, but I'm going to skip past that. So lower low, we have a lower high, and then we have a lower low. And we're going to use a different color structure. We use red. Let's draw in the pivot points of the fractal structure here, here, and here. All right. So now, as you can see, structure went up here, and it looks like it's coming back for this slowdown here. So it's not a confirmed swing point just yet. In theory, price could go like this, this, and still make that fractal lower low. So we got to keep that in mind. So how do we figure this out? Like, how do we figure out if it's likely that the fractal structure has potential to do that, where it makes a a higher low here, a higher high, higher low, et cetera, making that larger swing pullback for the move down again? How do we know that? Well, we look for this. We watch the structure that exists between here down to here, and we look for this exact scenario. If we get that, then more than likely the low has been put in. So we will do that now. Let's go down to the 5. Let me just get in the zone first. We'll go down to that 5. All right. So on the 5-minute time frame, we can see that structure is forming from the top down. We have a lower low, lower high, lower low, lower high, lower low, and possibly a lower high so far. If we break this high, then we could be talking business. The better play would be not to break this high. It'll make our lives a lot easier because that way we could just wait for this low to be taken and a structure transition, right? That'd be a lot better. That way the red structure drawing would no longer be, the lower high would no longer be for the red structure drawing all the way up here, but rather it would be right here. I should use a different color for this. Use purple. And as you can see, you have different levels of internal structure contained within the fractal structure. Obviously, this is its own pull. It's another bit of fractal structure contained within the leg here, right? And that's one way of looking at it. The other way of looking at it would be from the bottom up, essentially. So as we can see now, we have no break of structure that occurs. Looks like it's going lower. There we go. So purple structure drawing still goes down. So we have a lower low, a lower high, a lower low, a lower high, lower low, lower high, and then lower low coming towards that swing low or the wick low. Let's see if we take it, confirming this as a valid structure point. And we have. Great. So now we can go ahead and draw the red structure drawing up to here. We know that's a valid swing point now. And we can actually add in that swing point. Great. So we know that based on what we see so far, if we were to get a close on the 15-minute time frame above this point here, because that's what we drew the fractal structure on, then you are more than likely heading up towards this level as a weak swing level. And then up to this black level, which is the internal structure, lower high, you're more than likely targeting that as a weak level. And if you break this guy with a 1 hour close, because we drew that guy in the 1 hour, then you are more than likely going to head up towards the lower high on the 4 hour time frame. And if you break that with a 4 hour close, then guess what? You just started yourself a new uptrend on the 4 hour time frame. So swing structure would then be pointing up. So let's see how this progresses. All right, so no trade yet. Patience is absolutely necessary for this. Say if we're really lucky, structure will go bang, 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 giving us a higher risk reward because the lower high would be much closer than this guy. But I don't think we're going to get that lucky by the looks of it. Oh, maybe. Maybe. Oh, so close. Dang. That sucks. So that's unfortunate. Oh, we got it, guys. We got it, guys. Excellent. So now we can go ahead and draw this purple drawing down a little bit further. So the lower high is very, very close now. And we have to break this guy instead of this guy. That's what I like to see. Much cleaner. Actually, I should probably fix that with the magnet. I suggest you guys use the magnet or hold a control key on Windows. I'm not sure what the Apple key is or other software key would be, but I hold a control key when I'm using my trend lines, etc. So in this case here, we are about to get a close above. There we go. We got our close above. So this is where you can ask yourself, do you have a good feeling about this area? If you do have a good feeling, could you start scaling it now? Yeah, why not? I'm going to get my feet wet, as I say. So I'm going to get into the trade a little bit here. And my stop loss is quite clearly under this low. It has to be under that low. It cannot be anywhere else. So the initial trade idea is right here. Stop under there and targeting at least this high. Very poor risk reward, but hopefully we get a mitigation within this zone here. So how can we look at this? Well, we can look at the contents of the move up. So where is the fractal move up between here and here? And first of all, is there a break of structure? Yes, there is. So we can actually draw this as an internal break of structure. There we go. Let's go to the 3. So on the 3-minute time frame, structure presented itself like this on this last expansion leg. So up, down, up. So I'll look at yellow, I guess. Don't really have many colors left. So we have this structure here. I'm not going to use swing points for this because it's very, very local. Very, very internal structure, obviously. So what we can do is we can look at this zone because this is technically a previous range demand zone, and we can look for a mitigation in the green box. If we get a mitigation in the green box, I will add more after leaving it, or we can wait for and do it the safer way and wait for a structure change coming out of it on a lower time frame, perhaps the 2 or the 1. We'll see what we get. Now, obviously, if you break this yellow low here, then this could very well be a weak level and we could come back and take our stop loss out. So you may want to de-risk your long trade if you come down and break that with a close on the 3. All right, so this is looking pretty good so far. I may not have to go down to the 1 based on the way the structure is forming. So if I were to pretend to draw structure from the high down, it's going to be a different color. So I'll go down, up, down, because it is different structure after all. I suppose we can use this color. So if we break this high, this would be a good entry point. However, it's so close to my entry and I want to average down. I don't want to average meet in the middle here. I want to get a better entry. So I'm going to actually scale in here. And if we break that high, I'm going to add more in. This is all personal preference, mind you. Okay, so we haven't really broken that high. Unfortunately, we wicked it. That's not really good because, yeah, we're starting to break it now. So I suppose we can add in. We might get a mitigation of this newer demand zone because technically this structure drawing is now this. It could very well come down and make like a higher low down in this level. We'll see how this presents itself. But if it breaks this guy like it just is about to, then unfortunately, you're more than likely you'd have to delete the structure drawing, right? So we touched that high. That structure drawing is basically useless now. We can go ahead and continue with the yellow drawing. It's not a break yet, but we're still going to draw it in. Now it is technically a break of structure. So you have another IBOS here. So now perhaps we create some sort of demand chain. Where's the next demand zone? Well, it's hard to say. We can either use an order block width imbalance here, which is this guy, or we can verify that it's even a good order block by going down to a lower time frame and investigating the swing structure contained within. So is it a previous range demand zone? Well, you had the range, you had the initiation of the range. We did not get the mitigation back within this range. So let's go ahead and draw it up. Okay, now this was kind of wicked from there. So maybe I'll go with the old order block with imbalance. I'll go with the partial version of that range, but it is a valid range demand. All right, cool. I like that so far. So let's see what we get. If we come back in, we can add more. Okay, add more. There we go. We're coming into that range demand. We're maintaining that overall yellow structure drawing. So higher highs and higher lows, which is excellent. That's what you want in your favor when you're looking for trades like this. Look like it went a little bit lower there. A little bit deeper. Hopefully this demand zone holds. Very, very deep. But that's fine. That happens. So obviously now to continue on with the structure drawing, we need to take out that high. And we just did that. Great. So now, as you can see, we're developing a structure drawing from the low up. And if you were to continue on with the purple drawing, technically speaking, we drew it on the 5. But look what happens. This is how you know you're doing it right. Watch. So if they meet together, then you're doing something right. Watch. Right here, they meet together after this break of structure, the second IBOS. So they're overlapping poles now. That's excellent, right? So you can actually wipe the yellow pole and continue on with your purple pole if you'd like to. There we go. Okay, we're going to continue on with the purple drawing. Higher highs and higher lows. And if you didn't get into a long yet, well, guess what? You have another range demand model right here. I'm not sure if it'll become mitigated. And then you have an order block with imbalance. Refined within. Kind of messy. I'll just leave that over here. We'll use black for already mitigated. Or a grayish color, actually. There we go. They're already mitigated zones. These are not. And you came up above that high. So you're not getting the mitigation here. And that happens sometimes, right? Bitcoin especially loves to give those squeezes sometimes. So unfortunately, if you didn't get in, you didn't get in at this point. Now, we didn't really talk a whole lot about de-risking the trade, but I guess we can do that now. I didn't really think of it at the time because I was trying to show you guys the structure. But when this first initial break of structure happened, this would have been the stop loss. When this one occurred, this would have been your stop. When you had this one over here, well, then obviously this would have been your stop. Now, if you have a situation where you have the exact same structure, let's go down a little bit. Let's say you had the exact same structure drawing, right? We'll pretend we're drawing the purple structure. I'll try to draw closely, but it doesn't have to be precise. And then you get that initial break of structure. And we'll say that we know that the demand range created itself here. And let's say this didn't happen. Let's say you came down very closely, you didn't hit it, and you took off again. It is possible that you could come down and mitigate that first demand range and still take off where you actually do get a close below here. So how do you play that? Well, if you see a situation like that, you have to investigate the structure between here and wait for that structure to flip. Once it flips coming out of the box here, then you can enter. Okay. That happens sometimes. Nothing we can do about that. See it all the time. So in this case here, clearly we are in a safe trade, a free trade, if you will. There's no way to lose on this trade now. And because we hit that high, this is where we should have de-risked right on the high, but because it was so aggressive with no reaction off that high, it is what it is, right? We can say, well, this is where we'll de-risk. So we'll take our partials out, and from here, we can actually wipe the purple structure drawing. It's useless now. Purple structure is useless now. But what we can do is we can go ahead with the red drawing. So we have this guy, and now we have the higher high. So in theory, price can come all the way back down to mitigate wherever, really, the unmitigated portion, which was right here, and continue on its merry way using the fractal structure, okay, or the downwards fractal structure. And obviously, if it doesn't, and it does something like this and then up again, well, then obviously then this is very, very unlikely. In fact, you'd want a bullish structure change coming out of that then, because it's quite risky in that regard. Because if you break this guy after a situation like that, you flip from local bullish to local bearish, okay? Remember that. Let's go to the 15. Where's our last 15-minute lower high? Well, it appears we actually had a break in the 15-minute structure as well. which was the red structure. But if we were to go ahead with the black structure drawing, technically speaking, you could argue that this was also a 1 hour break of structure. Let's see. So if we actually went over that with black, yeah, that would still be a valid 1 hour break because you have 2 up candles here. So really the target was hit. We just didn't know that low was going to be taken before we started the example. So in that case, this would still be, in my opinion, a weak high. Like I would still target this as a weak level because in theory, because you broke the swing structure, you are more than likely coming up to that the swing internal structure. You are more than likely coming up to the primary swing structure point now, which is the 4 hour lower high. But remember, structure is still bearish, so we cannot forget that it could very well come up to here at any point and switch swing structure to local bullish to local bearish, which would mean that this would become a weak level. So I don't know how this plays out, but we're going to see. So price is coming up. Let's go to the 15. We can continue on with our drawing here. We can hide that position that's in our way. I don't know if I can get that point now. I might have to drag it up. There we go. So we have a higher high and a higher low, and once again, a higher high. So you want to continue with those red structure points, you can. Or you can use the black ones. It doesn't matter. They're the same now. They met together. I like that. I like when that happens. Makes life a lot easier. When the swing and the fractal meet like that, great. It doesn't really have to per se, but we're lucky in this case here, and it actually has. So now what's happening? Well, we had a initiation out of this demand range, and now price is coming back to mitigate that demand range. Maybe you're like, well, geez, I have high confidence in this. I'm going to add more because we mitigated that demand range and we're pulling out of it. So now to continue the trend, we need to break this high. Ooh, that was a pretty far down wick. Some people may have been stopped out by that wick. Okay, maybe you had your stop loss under here. That's still a successful trade. In this example, we didn't even discuss putting the stop under here, but there's always a possibility that you can wick out a level and still maintain bullish structure. So now this became an immediate weak high when the SFP occurred. The job of this high was to take out this low. It failed to do so because it produced a wick instead under that low, which therefore produced a weak targeted level, a very weak targeted level, and ultimately coming up and taking that structure point. So we have to continue the structure drawing. Okay. And we are looking for this guy for a first partial, or second partial rather. Oh, there we go. So this is where we can scale out the trade. And we did not receive a close above. So if this wicks above, technically this does not necessarily make a weak level now. You have to keep that in mind. And the reason why it doesn't is because if I remove this red structure drawing temporarily, watch. I didn't realize I did it this many times. That happens. Okay, no problem. So if we hide all those red structure drawings temporarily, as you can see, if you continued on with your bearish swing internal structure, then you would end up with this, which is the same as the red pull as we discussed before. So why does SFPing this level produce a weak market structure point down below? I mean, it doesn't. How could it, right? It doesn't relate to any market structure points anymore. It's almost like you would think it would, but it really doesn't matter, right? This does not mean jack all anymore. However, if we had not have taken this low over here with that wick, then yes, this would absolutely produce a possible weak targeted level should you transition structure from the uptrend, from this point to this point. If you have an uptrend with that SFP in that case, with the wick like that, just like we see now, then in theory, this would be a targeted level upon a break if you broke right here. Okay, and we could then short it all the way down. But we don't have that. Lucky for us. So now we can add all those red structure drawings back in. Okay, there we go. And we can continue on our merry way with this red structure drawing. So what does this tell us? Well, technically speaking, we can come all the way down to this big old demand zone for a mitigation, right? I suppose I should use green. This guy's already mitigated. We can leave him over there. And it is possible that we come down to here or we start a range consolidation, then break up. Because technically, we still have quite a ways to go for that 4-hour lower high. And I do not see any evidence of a bearish structure shift or change yet. Okay, but we're watching this very closely. If this red structure drawing now turns to a bearish structure drawing, it's actually red and black, but then in theory, you broke fractal and internal structure. So that's a big no-no. That's a bad sign. And we'll look for shorts all the way back down again. Okay, now we're going to mark out our high, wait to see when we take that high to confirm the next higher low. Okay, we have a higher low. We can continue on our merry way with this drawing. We have this guy, we have this guy. So this is really useless now. we could draw it in for an area that price may bounce from later, but I mean, it's going to be scalping off of it and you need structure in your favor coming into it. So it's not a huge deal. We can mark that out if price retraces. So now, quite clearly, the stop should be under this low here, but we have to leave room in case we get a wick like this again, right? It's always wise to leave a little bit of extra room. So in this case here, price is mitigating. You had the initiation away. Price is now mitigating that previous demand range. And we're waiting to see if we get more initiation up towards this 4-hour swing high or lower high. So again, how do you know when this is likely in? The high or low? Well, look at the structure from the top to the bottom. Okay, follow it down. Let's see. Let's use a different color. Use purple again. So we have a lower low, a lower high, and a lower low so far. If we break this guy with a 15-minute close, then we probably have the higher low put in place. Okay, we did. So more than likely, this is probably the protected level. Even though there's still inefficient price action below, you should always keep that in mind. Okay, there is some fair value gaps in here. You should keep that in mind. If I threw my indicator on, you would see that, or you can draw it manually, whatever floats your boat. See them, right? The red bearish ones. So we're going to keep that in mind, that there is a chance that it could still wick down and hit those fair value gaps. But it may not happen either. It might just come up and take out that high. And there you go. Right? Exactly. So it came down and wicked out those fair value gaps into this little order block right here. From here with a reclaim, maybe this is where you decide to add more. So obviously now, unfortunately, because that wick occurred, this becomes the high that we have to take. So obviously waiting for this to break above and then expecting another retrace, you may not get the retrace because of that wick right there. Yeah, oh, you actually did get the retrace. Nice. I played it a little bit too quickly, but you could have added more in based on that reaction right there alone. And you broke structure. So you had the initiation out of the range plus the mitigation immediately. That's amazing. And it was a refined mitigation. Technically, the demand range was actually between here. So your V shape between this point, and that point. So if you connect your V and then draw a rectangle over it like so, then you have your demand range, right? This guy's mitigated. It should be black. Mitigated that guy, and then we mitigated this guy, so now he's black, right? We got a black mitigation there. So we have to delete this structure drawing. It's useless now. We can delete all these old swing points if you'd like to. If you want to label your breaks in, you can. I'm not doing that for this example. There'd be too many lines. If we come above this high, I'll partial out of the amount that we just got into, right? Just kind of trading as price develops, taking profits as price develops as well. Oh, very close. Okay, there we go. We can sell off what we just bought here for a quick profit while we're still in the same trade. Who cares about the average entry? If we're making money, right? Actually, the average entry is all the way up here now. That doesn't matter because we're playing the adding in and closing out some kind of game here, right? Which is very typical. I'll do that all the time. So I don't mind ruining my entry to get to make some extra bucks along the way. Sometimes I'll do it on a different account. Sometimes I won't. So we had a break of structure here, and then we have a new demand range. The new demand range is being mitigated already. Excellent. So if we get that structure change like we just did here, from the internal structure, from the high down, we went up, down, break up. If you come down and make a retest off this newly formed demand range, that could be the next move up for that high. Okay, it didn't do that in this case. It came down a little bit lower. So in this case, we went down lower under this point. Could there be something under there? Let's actually check. Let's take a look if there was some reason to go lower here, because usually there's a reason. So there could have been a fair value gap that was there. It could have been just a part of a Wyckoff model. Sometimes these flips and structures can happen. In this case, you had a wonky example where it came down one more time, producing a Model 1 accumulation schematic, which isn't unheard of. It happens, unfortunately. And they are definitely the trickier ones to play versus the two. And in this case, yeah, this was definitely one of those ones that would have blindsided you, unfortunately. But upon the break of structure, why would you have entered long without actually looking to see if structure had the flip coming into that zone? Do we get the flip coming in? Let's investigate that leg between the top and down to here. So if this was your POI to enter on, your demand range, well, let's see what you had coming into it. Look at the 5. 5's a little bit cleaner to look at, I guess. So in this case here, price was down, price was up, price was, you might have had a down, up, down here, but basically that. On the 5, you may have had a little variation on the lower time frames in this example, but ultimately, again, you can flip-flop lower time frame structure. 5-minute structure is very solid. If you're a beginner, I suggest using the 5. the 10, the 15, the 1 hour, and the 4 hour. Those are going to be your primary structure time frames. Again, that's 4 hour, 1 hour, 15, 10, 5. If you want to challenge yourself, you can definitely add the 3, the 2, the 1 in later on. But are they required? No. They will produce more frustration as a beginner than anything else, because that's where you get all those structure pulls that flip-flop all over the place, like what you see here. This could have been a break on the 1 minute or the 2 minute time frame, making you believe that you had a break of structure coming into that demand range. Therefore, it made sense for a higher low and higher high. But if you look a little closer, you can see what actually truly happened here, and you can make sense of this. So let's try to make sense of that. Let's go to the 2. Let's see why this went wrong. So you went down, up, and this did trade lower. So it was a valid break. So we had that valid break of structure here, but why didn't it work is the real true question. I can tell you why it didn't work. Price came down, made the higher low. You would have entered somewhere around here, and then your stop would have been under this guy right here. That's fine. Your target is always going to be the most recent high, and then you could have targeted this high if you had taken that with a close. Key word, a close. Was that a close? I don't think so. So what does this mean? Well, we add our red X in. This tells us that this was not a close, and this became a weak targeted level. So you went from a weak level to a weak level, essentially, right? And that's not good. Obviously, when you see this situation, if you were long from here, you should have put your stop to break even and took a partial right away. That has to be your reflex, or closing the trade and accepting that this is not worth the risk. It's time to wait for a new position. In this case here, that was the answer as to why this failed, right? This very simple wick, or wicks with an S, was the answer, right? So then ultimately structure changed, and we went higher, breaking structure above here finally. So the fractal structure changed, so it was no longer this, because you had that false move here that screwed the entire thing up. It became this, and then obviously breaking above here would have signified that this was the next target. Because of a very, very simple 2 minute screw up there. That happens. That's part of the game. So now that we've taken this high, if we see sign of pullback, we can close out some more. How much do we got left in the trade? We got 4 left. We're seeing maybe some sign of pullback here, and we're close to the high. We can settle with a little bit here. I'm not going to take this to eternity. If it keeps going up, and up, we're going to just take profit where we intend to, and that is right now. So we just closed the entire trade, and we ended up with a lot more money off this trade, just following structure, and we didn't do anything fairly advanced. We just watched structure for what it was. I call this the basic version of looking at advanced structure. If we really wanted to get into this, we could. And as time progresses, I will be adding more advanced content to the course, obviously looking at structure in various ways, rundowns, markups, etc. But until people get this part down pat, obviously it's not really the best idea currently. There's a lot to this, and it definitely takes time and practice. There's no such thing as being perfect at drawing structure out and looking and analyzing structure. Even myself, who has been doing this for a very long time, and I consider myself a guru when it comes to market structure and these sort of concepts, even I make mistakes because we are only human after all. Remember that. Always, always remember that. So let's see if we actually got that 4 hour close above though. Oh, look at that. We probably did. Let's go to the 4 hour. And we'll actually go like this. Get all that stuff out of our way, because I want to do one more run through here and just explain what happened. So we started with this 4 hour orange colored downwards pull, the down, the up, the down, up, down, up, down. From there, we dissected the last leg. It's always the last leg. So we dissected the last leg down using the 1 hour pull right here. And after the 1 hour pull, we dissected this leg between here and here. And we found out that on the low here, you actually had a 1 hour flip-flop in structure, which combined the black structure drawing to the red structure drawing, which was our fractal structure in this last expansion leg. So remember, if you're looking for longs, this is one of the best pieces of advice I can think of, guys. If you're looking for longs, you're looking for structure that's coming against your long idea, and you're waiting for that to change. If you're looking for shorts, you're looking for structure to come up against your idea, and you're waiting for that to change. Very, very key. Okay. Longs, down, up, shorts, up, down. And you'll see why this makes sense later, I'm sure in another video or two, but it really does make a difference. Because if you're not paying attention to structure, then, what I mean by that is, actually, you know what? Let's get that over with now. So what I mean by that is, if we had that same area, this guy right here, and let's actually draw it out. This is why it's important to follow the way structure is going. I'm going to show you guys. So let's say we had that same 4-hour downtrend. Or, let's go with the 1-hour downtrend. We don't need to go that far with it. So here's a 1-hour downtrend. We ended up with an unconfirmed lower high, basically right here at the top there. And we've seen price coming down like this, right? On the 15 and the 5. We've seen price coming down on the 5, I think it was. So the price was coming down on the 5. So remember how I told you guys before, we don't know for sure if this is a confirmed lower high? Well, that's it, right? We don't know for sure. Price could still go like this. But the thing is, if this low was not taken and you seen something like that and you still got involved within the trade and you start trading long here, the idea is you can get really, really messed up very quickly because the structure drawing ends up going like this, like this. You might get a little bit too overly bullish because you didn't wait for any downwards pressure structure besides this little guy here to break, right? You don't want to get involved with that. So make sure that you realize that, hey, it's all making sense from the downwards direction or bearish direction to switch bullish before I get involved. And technically, this is internal longing. If you're longing internal structure, it can work if you're good with internal structure, but for newbies, it's going to mess you up because maybe it just comes up like this a little bit and then goes like that and takes you out. Or maybe it just comes up bullishly here, rips down, takes that low, and you entered right in here. There are ways to trade internal structure, obviously, but this is like the most internal version of structure you can get, I call it, when you have that structure that you're trading the idea that, hey, the lower high is going to be up here a little bit more, basically, and something like that, right? And you're trading it up to that point, but you just got to be careful with that. So what happened instead was this. We took that low, which therefore made this the confirmed swing point to take, swing internal structure point to take. And once we took that swing internal structure with that close rate here eventually, that's when it signified that, okay, retracement up made sense, right? Coming up to those higher points.